Hello, everyone, and welcome back to TradeFinder Live. It's great to be back with you all during this trading week and during trading hours. Very excited to introduce Mr. Rob Roy here in just a few moments, but as always, we have to cover off our disclosure disclaimer agreement. If you've attended any of our live sessions before, then you've seen this. The main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. That's the main thing to take away from it. Other than that, market appears to be pausing as expected in front of the Fed meeting results that are coming in tomorrow, as well as big cap earnings this week. And that'll start with the Microsoft earnings that will be after close today. And so interested to hear what Rob has to think about that. Of course, very excited to interact with you all. So thank you for joining us. And at this moment in time, I'll introduce the man of the hour, Mr. Rob Roy.
Good afternoon, Zach. Hey, everyone. Welcome to TradeFinder Live. As you can see, back up in the mountains, just too darn hot in Florida. But yeah, lots to talk about this week. And we had talked last week where I felt like the market would kind of wait and see. We got past the GDP report, we got past the PCE report, and now we're looking at earnings and the all-important Fed meeting. It's a two-day meeting, so it started today, but they don't make the announcement till tomorrow. And some of you had posted comments about that. I like seeing stuff like that on the YouTube video that I post on the Elliott Wave Options channel, and varying views on what the Fed may do. But I think it's going to be the Q&A and Powell's comments. Don't think they're going to. I think there was a tiny whisper of a July cut. I don't think that's coming. But the market, I believe, will be quite disappointed if Chairman Powell doesn't guide towards a September cut. So if we take a look at the chart, you can see we're kind of hovering around this 38.2% fib retracement level. And by the way, if you haven't gotten a copy of the software yet, you need to do so. Go to hub.com, hubb.com. It's in beta form. It's free. Nothing to download on your computer. It's all browser-based, but there's a lot of cool features like this fib retracement tool here, where instead of just drawing lines, it shades them so you can see where the breaks are in the different fib levels. So not a big deal, but nice little addition. And there's all kinds of cool little features like that on the software. So there's the 38.2% level. We're right here. We've been going sideways pretty much for a week now, at least 5 trading days. And we're also right at the 50-day moving average, which is that royal blue line. So the market could hold here if Chairman Powell does give the market what it wants. And the fact that we're going to have more than just a December cut. Somebody posted on there, they were glad I was warming to a September rate cut. Well, the numbers are kind of guiding us there. I didn't really think and I still don't think the Fed wants to cut in September, but I think they risk waiting too long if they don't. So that's kind of where that's coming from. But the market certainly wants it, that's for sure. And so I believe that every single word of Powell's commentary is going to be dissected, and the Q&A certainly is going to be quite interesting afterwards. So we could see some movement in the markets tomorrow. But right now, just right at that 38.2%, 50-day moving average levels here, waiting to see what happens. If we move this to an intraday chart, you can see that we're just kind of trending down, have been all day long, just pretty much from the open, just moving down. That's the 3-minute chart. That's what I watch intraday. Perhaps we get a little bit of a bounce moving into the close. We'll see. But yeah, nobody wants to get in front of anything with the Fed tomorrow. So that's what we'll be watching, and see if we can maybe bounce up, extend this wave 5, maybe turn that 5 into a 3 if we move higher. If we move lower, I've drawn this red line here. The 50% corrective level would be the next move, which coincides with that wave 3 high. We'll hit that in a heartbeat tomorrow if the Fed disappoints, and probably lower than that, maybe down to the 61.8% level. And who knows even if that holds. So this is one of the more anticipated Fed meetings in quite some time. And then, as Zach mentioned, we do start big tech earnings with Microsoft after the close today. So the market will be watching for that. We'll bring that chart up because we have a case study consideration there. But let's go ahead and take a look at what else is going on, pardon me, in the markets at this point in time. Starting off with the VIX, And boy, we're just kind of hovering right here at that 17.5 level. I thought that might act as a little bit of resistance and maybe we move back down, but actually it's just gone sideways and allowed the 10-day moving average to catch up. As you can see, we don't want that to be the bottom, not if you're long the market. If you short the market, then you do want that to act as the support level. It's been resistance for quite some time, but we're hanging there. And so we'll see tomorrow. The VIX will probably be wild tomorrow, along with the market, depending on where things move. Interest rates have been quite interesting. A little bit of a dip down, so you would have thought that maybe the market would have been reacting a little better today, but there's just too much on the line with the Fed meeting and all these big tech earnings. So even with rates ticking down a little bit, still not getting too much of a bid in the market, at least not now. There's still a little time between now and when we close. But you can see the arrow that I drew about 2 weeks ago. Now the 100% extension looked like we were going to head down to that 161.8% level, and then came back up and spent another week or so right at that 100% level. If you wonder why we look at these zigzag patterns, Elliott Wave, Fibonacci levels, just look at that right at the 100% extension. So we bounced up to the previous fib level, came back down, held here, looked like we were going to make the extension, which following the rules, you're supposed to test the previous fib level before going lower, but then it got drawn back to that 100% level. So maybe there is a little anticipation in the bond market that the Fed is going to give the market what it wants. And if it does, I think we could see this move down to the 161.8% level. I had mentioned that I wasn't too excited. I mean, I know it sounds counterintuitive to see rates come down too far because that means the economy is weakening, and we're seeing that. We're seeing weakness in the economy. We're seeing weakness in consumer spending. The one thing we haven't seen is a break in people on the road. I can tell you that the roads were full, and I like to drive overnight, and still plenty of cars on the road with oil giving just a little bit of a break. But we'll look at oil in a few minutes. But that's what's happening. We are seeing a weaker economy, and I think that's where the fear in the market comes, that the economy is weakening, the consumer is weakening, it's not spending as much, and if the Fed doesn't guide fairly strongly towards the September cut, then yeah, I think we could see a wild day tomorrow. Looking at the dollar, interesting to see what the dollar is doing. It's kind of giving you a little bit of a different view. You would think with rates going down, the dollar would be going down, but perhaps the dollar is getting a little bit of a bid. It's been hovering for a couple of weeks right at this 104 level, right at the support level where it's been the whole year. And when there's global weakness, money does move into the dollar. It's still viewed as the currency of last resort, and I think that's what's evident there. So if you're wondering, well, why is the dollar higher if interest rates are lower? That sounds counterintuitive. But the other side of the coin is, with rates going lower, it makes it easier for the U.S. to finance all this incredible debt that we have. When rates go up, it costs more to service the debt. So rates go down, easier to service the debt. It almost allows the government a green light to spend more. But at some point in time, it seems like we need some fiscal responsibility here in the U.S. But I digress. That'll be topic for another time. Let's look at the rest of the markets and see what's going on. The Dow still hanging in there above the 10-day moving average, so acting a little bit better than the S&P right now. That would be expected. The Dow would be slightly on the defensive side with all the rest of the markets that we look at. So you would think it would be performing just a little bit better, and so far it has. In fact, the Dow looks pretty constructive right here. Getting a little bit above the 10-day moving average and just kind of hanging in here, letting it move up. We completed this zigzag back here. We actually already moved past the 161.8% extension, so I can kind of take that off, and I probably will at the next broadcast. But moving up here, now we want to see if the DIA can extend this wave 3 and move higher. So not enough of a correction to label a wave 4 there, so we're still in a wave 3 on the DIA. So again, that makes sense. with what's going on with the markets, especially with the drawback we've had in big tech. So can Microsoft save it? We'll see after the close today. And speaking of that, let's go ahead and take a look at the Qs. And that's where we're seeing a little bit of weakness today, as you would expect. But note where we are. We're right here at that 61.8% fib corrective level, 38.2% on the big move, but 61.8% on the wave 5 movement to the upside. So two different levels. We have a 38.2% in the zigzag pattern, 61.8 in the wave 4. So two different levels that suggest that the Qs could hold here. But if it breaks that, there's just not much here from where we moved up from the B wave of the big zigzag pattern all the way up here to 450. So if we break 450, I think we're down here around 420, 415 rather quickly. But we'll see what Microsoft says. Note that right now at this moment, we are a little bit oversold from the 10-day moving average. So maybe we hold right in here, but I kind of doubt it. There's too many big tech companies to report over the next few days. So I don't think we're going to hover around this level very long. I think we're going to make a move pretty quickly. And then if we take a look at the IWM, and we see it's just kind of holding in there sideways, which is pretty amazing. The fact that it has gone through and consolidated that big move so well. You would have thought, really, that with that big move, we would have gotten, at least I would have thought, we would have gotten a little bit more of a corrective move back down, but we haven't. So when we put the moving averages on, you can see we're trending right above that 10-day moving average. So we did come back and correct this overbought condition here where we got too far away from the 10-day moving average. Y'all know the rules by now. Nothing goes vertically up for long. And what goes vertically up often comes vertically back down. No security in any time frame gets away from the 10-day, too far away from the 10-day moving average. We talk about these things week after week after week. I know we have new people viewing. Welcome to those of you that are new to TradeFinder this week. But you'll hear those rules a lot, and it's because they matter and they work. So when we take a look at this, you can see that we're hovering right into this area right through here at 225, which is a little surprising to me. I thought maybe just because of the historical facts of the way the IWM works, it seems to work in 20-point ranges where we go from 170 to 190 to 190 to 210 have been the two ranges, but moving up towards 230s where I thought we were headed, and maybe we still do. Maybe we just needed to consolidate that first big move first and then move out. And just as a quick reminder, we did have this big triangle pattern right here, as you can see, and we broke out. One of the three ways the market can break is that vertical move, and that's what happened there. And consolidating it. Now, we also need to remember that based on Elliott Wave breakout triangle rules, at some point in time, and it doesn't have to be soon, it's the same thing as filling gaps. Gaps get filled. We don't know exactly when they're going to get filled, sometimes right away, sometimes it takes some time. Same thing with moving back to the point of a triangle breakout. So the IWM at some point in time is going to make a correction, but that could be down the road. And I've been talking about if we do continue this melt up in the markets, and we need the Fed tomorrow to do that, or it's over. But if we do continue that, then perhaps once we actually start cutting rates, it'll be the buy the rumor, sell the news type of a scenario as we move through this point right here. All right, so that covers those markets. Let's take a look at the crypto world. Bitcoin has caught a little bit of a bid, made it almost to 70,000 yesterday, back down a little bit here, but we need to hold 65,000. And if we do, then perhaps we take another run at that 70,000. But it was nice to see Bitcoin get back up to 70,000. It's been a while, as you can see down here at 52,000 or so, which we said was going to happen if we broke 60,000. So it did. And now we've made a nice move back to the upside. So all those coins that were dumped on Coinbase through the U.S. government, German government, another failed crypto exchange, etc., seem to have been absorbed. And what we'd like to see now is channeling in here between 65,000 and 70,000, because if we can break that 70,000 level, you can see how long that's acted as resistance. And if we break above that, then boom, off we go to the races to the upside. And I think that's going to be really key. Then we look at Ethereum, which still hasn't gotten back to 3,500, and feel like we need to do that. Got to be something going on with these new ETFs with Grayscale, et cetera, as far as why we haven't seen more of a bid here. I'm not privy to too much of the fundamental stuff behind the scenes. Just look at the charts, and I know that we need to get back up here above 3,500 on Ethereum. If we do, then I think we hit 4,000 rather quickly. But we can't do that until we break above this resistance here at 3,500. That has to come first. So if we can do that, then maybe we have something working there on Ethereum. Let's take a look at the metals. We'll look at silver and gold. So we look at SLV, and we talked about this with a case study consideration here, right here on TradeFinder. So we had the triangle, it broke out, and we had a target a little bit higher, and we closed it out beforehand. And that's why we do that. And that's one of the helpful things of the alert subscription at ewotrader.com is we send out alerts for not just entries, but any adjustments and exits. So if you were following this, did you take this off? Just didn't like the way this was looking. And that turned out to be the absolute right thing to do, as now silver has broken below this 38.2% extension here, and below the point of the triangle, and below the 50-day moving average, and below the 10-day moving average. So it's trying to give us a little bit of a bounce today, but that's from an oversold condition. You can see this big gap down. There's the rule, too far away from the 10-day moving average. So we come back up, but we got to get silver or SLV back above this point of the breakout before we can feel better about SLV. And it's been outperforming GLD until recently, and now it's underperforming. And you have to wonder if that's what's been going on in tech land, because we all know that technology uses a lot of silver. Now look at GLD, came down here. I thought getting this close, we did test the 50-day moving average. We got that close. I thought we might go ahead and just hit the point of this triangle. We didn't quite get there. We got awfully close. Maybe that was it. And now GLD back to the upside here. So there's your outperformance. There's the GLD now outperforming SLV. And I do think that has to do with the weakness in big tech recently. Not sure what other reason there would be, because they normally work. They don't always have the exact same patterns, as you know, but they're usually fairly similar. But there's a pretty significant difference between the performance of GLD right now and SLV. All right, so that covers those. I did say that we talk about oil before we get to stocks of interest and our case study considerations. I'm actually going to show the case study consideration for this week before I move into taking a look at the previous ones. Here's oil, and this is what I was talking about. We're getting a little bit of a break here. I'm surprised to see it trading below 75. I don't know how long that's going to last. We're a little bit below the 10-day moving average, which is right there. So I felt like OPEC has said they wanted to keep the price. They wanted 75 to be around the floor. They did say they were going to start increasing production in August, and I mentioned that I would be really surprised if they do. I don't know why they wouldn't want to wait and see how the election plays out. And we don't play politics here, but the differences between the two parties. Democrats are anti-fracking, anti-domestic drilling, and the Republicans are for those things. So obviously, whichever party wins the election is going to affect what happens with oil. So why would OPEC step in front of that and start raising production before they see how the outcome of the election is going to be? At this point, I just feel like that's going to be a one-day break, but I could be wrong. This other rule, one day means nothing. You have to have a second day, a follow through, or a confirmation day. So breaking 75 today, while meaningful, carries more weight if we follow that through with another breakdown tomorrow. And the consumer's weakening, but as I said, my experience on the highway is that there's still not a lot of cars out there, a lot of people driving. But if we do get the follow through below 75, we're almost certainly going to retrace that entire C wave and come back down here down to around 70. So that'll be something to watch tomorrow as well. How does oil trade? Do we get a follow through day here below 75, meaning that we're likely going to head down to 70? So the case study consideration for today is going to be on SBAC, and that actually happens to come from our AI search. And so we are going to be doing a special, both Jeff and I are going to be doing, the other trader at ewotrader.com are going to be doing a special presentation talking about the launch of AI in this platform. Y'all have been waiting for it. So we invite you all to show up for that, attend it. I think you're going to find it really interesting. So in honor of that, I thought I would make that our case study consideration for this. And we will also have both the head of Hub and another principal and very knowledgeable AI trader will be taking care of that event. So make sure that you tune in for that. You'll get a notification, and love to have you join. You're going to have the experts there on this and showing you the features, etc. Talking. If you want to know the ins and outs, they're the guys to listen to. So make sure you listen to that and join that webinar. It's going to be really exciting. I'm looking forward to seeing it myself, even though I already have a lot of information on it, but never as much as those guys do. So we're looking here with SBAC, and the expectation here is that we're going to move up a little bit higher. So that's going to be our case study consideration for today. And we'll come back and let Zach go in and show you how to put that in as an idea in the platform. I'm going to show you the zigzag pattern that also exists on this. So always like it when there's a zigzag pattern inside there. So there's our potential target up there around 230. I believe the actual AI target's 227. So they're both kind of in that same area. So about a 10-point move here, trading currently at 217 up to about 227, 230 on SBAC. I will note that the spreads, if you're an options trader, there is liquidity, but they're a tiny bit wide. So just be patient on your fills. Don't rush to pay that ask price if you're an options trader. But that's a great looking pattern to me. And then when I add in the DMI, you can see it's constructive as well. So that one looks pretty good. Now, the negative here, and this is what you're going to learn about in that webinar, is the score here is 71. We send out alerts to our alert subscribers on scores of 75 or higher. So it's a little bit lower. So just wanted you to be aware of that. But everything else looks really good. And it's still a decently high score. But 75 is kind of where we like to look at to send out actual alerts to the alert subscribers at ewotrader.com. But I still like this one. I still feel like this has a great chance of playing out, even with a score of 71. So just wanted to note that so that you're aware of it. And we'll see how it plays out, because we'll be able to watch it over the next couple of weeks here at TradeFinder Live. So let's take a look at some other stocks of interest. While we're doing these, let's look at our previous case studies here. When this one was last week, Campbell Soup, and it's moving up rather nicely. We had a target price of 49. You can see he's having a really good day today, following up through the 10-day moving average nicely. So that's working extremely well. Now, two things here. On Microsoft, we know that's one of the stocks that reports earnings after hours, and you can see that it's down in front of earnings. almost to this C wave extension here on a downward zigzag. And yes, zigzags work to the downside as well as the upside. And what's really interesting, this confuses people, but it actually happens all the time. We have a complex C wave. So we have this upward C wave, and within the upward C wave, we have a downward zigzag pattern. So what that's called is a complex pattern, when you have a pattern within a pattern. And as long as we hold above this B level here, which is a very strong fib level of 61.8, this upward one is still in play. It doesn't mean that this is out of, it's not disqualified. It's still qualified. It's just we have a complex C wave. That's all it means. Now we have to hold here. And if we hold at this 100% extension, then this is still valid. But if we break below this and break below this B wave, then you exit there. So there is some risk with earnings after hours, depending on where you think Microsoft may come in earnings wise. If you're not very confident in the earnings, then probably want to close that one out, not follow along with it through earnings. But just because we have that downward zigzag, I thought it would take a minute to go through and explain that. And that's one of the things about learning about Elliott Wave. And that's why we have so much education on Elliott Wave on our website at evotrader.com, is because of the fact that we go through and talk about all these different aspects of it. But we don't get into the unbelievably tedious labeling of charts. We look at it from a trader's standpoint. How do we use these patterns for trading rather than just being the greatest Elliottian at labeling patterns? Becomes in paralysis through analysis, where people become so focused on getting all the labeling right that are they actually trading based on it? Are they whipsawing themselves by all these little things? So we try to focus on a trader's aspect of it. It doesn't mean that we ignore things. It's just that we talk about what's the most important stuff to look at from a trader standpoint. So Microsoft after hours, obviously all eyes will be on that and see if we hold this level and bounce back up or break below this one on a poor earnings report. Now SMCI, we nailed that one. We were talking about this from a speculative standpoint, saying that as long as we stayed above this level here, around 750 or so, there was that whisper that they may be next in line to announce a stock split. And if they do, it usually puts a bid under the stock. But if we broke below this level, then you need to get out of that. Don't follow along with that. And look what's happened here. As we broke below that level, now we're moving down into this wave 5, and we're at a 75% extension. So if you follow along with that, you would have been out a while ago. So that one's, we don't follow that anymore. Perhaps they announce a stock split, and then we'll trade that according to what happens there, and then into the actual split date, because there's a number of ways to trade stock splits. Anticipation of an announcement is one of them. But that one you wouldn't want to follow anymore, because who knows where we could go to the downside here, especially if they don't announce a stock split. But we talked about this level. As long as it held here, you could stay speculative on that. But if we broke that level, you needed to get out, and that's what happened. So we'll take that one off the list. So SLV, we nailed that one. CPB is looking great. We talked about the exit here. So all in all, pretty well. And if you go back and look at the track record, these case study considerations that we've done here on TradeFinder, is pretty phenomenal, really. I mean, there hasn't been that many losers over the years. And you can go back, all the recordings are there. I invite you to do that and watch what's how they've turned out. All right, so let's look at a couple other things here real quick. Tesla, we talked about this one with this triangle. I said this was my favorite triangle breakout pattern. Would have loved to have done a triangle on this, just too expensive. But you know, there you go. My favorite pattern, where you have a vertical move up that consolidates into a symmetrical triangle. And I've been trading triangles for a very long time. And the first book was written, a publisher actually contacted me and said, hey, we hear you have something really cool. And a book was written about this on triangles. But my favorite setup is when you have a vertical move into a symmetrical triangle. That's going to break out. And it did. And it broke to the downside big time and we've come back up and tested the 10-day moving average, but that's it so far. And was talking about how we had this big run up because they did announce more deliveries than expected. But we all knew that they were cutting costs in order to get those deliveries. How was that going to affect the bottom line? That was the commentary that we talked about. And that's what got them margins. And that's what happens. The margins came down. And boy, if your margins go down, it doesn't really matter what your earnings report says. If your margins are being compressed, the market's going to spank you. And that's what kind of happened here with Tesla. So I thought I would just update that. And then also natural gas, UNG here. We take a look at this move here. We are kind of bouncing today from an oversold condition. Was really surprised to see it break below 15. There's no way to know where this wave 3 is going to end now. So today's move, not even back to the 10-day moving average. So we're just bouncing up from an oversold condition. You can't go long UNG unless we get back above 15. Now, if we do, and the market starts looking ahead towards wintertime, as I mentioned, a lot of people trade natural gas based on the Farmer's Almanac and all that as far as expectations of whether it's going to be a cold winter or warmer than expected and all that kind of stuff. So I'm not familiar with what the forecast is for this upcoming wintertime. But this would lead me to believe that there's not a lot of chatter about, oh, this is going to be a really cold winter. But maybe so. And this is a little bit of a setup. But once again, 15 is the key level to watch on natural gas. If we can get back above 15, then perhaps we can have something moving here. I thought I would show you INDA, which we show a lot. And you can see with INDA, this movement down back to the upside. Just doesn't want to go down. Didn't even make it. I thought we'd be coming down to the 50-day moving average and hit 55, which is where support is. That's where the red line is. So that was a support level, not a great one, but a little bit of one. And we got too far below the 10-day moving average, and now back to the upside. Now the question becomes, can the INDA break above 57.5? And if it does that wave 5 extend, or does it relabel to a wave 3? So that's what we'll be watching if we can get back above 57.5. So I think right now, and I talked about this last week as well, if you're a trader in the INDA or the Nifty, I think you just have to wait and see. This is wait and see mode here on the market in India until it gives us a better view. We could have a short trade if we break below the 55 level and the 50-day moving average, and we could have a long trade if it breaks above 57.5. But we're in no man's land right now in between those two levels, so it's just kind of let's let it do its thing and then analyze the charts based on what the stock actually does. And that's how you become more successful as a trader, by looking at the charts, reading the charts, listening to what they're telling you, rather than trading by what you think is going to happen. And that was a lesson I learned over 20 years ago. The market doesn't care what I think. You can have all the knowledge in the world from a fundamental standpoint and trade according to what you think the market should do based on that knowledge. And oftentimes the market doesn't do what makes sense. The market does its own thing. So you can choose to listen to what the market's telling you, which is what software programs like this do, or trade according to what you think is going to happen. And I think you already know the answer of which of those two is going to be the more successful one. All right. So with that, Zach, go ahead and take some questions before you hop in to show the folks how to post an idea on the platform.
Absolutely. That sounds great. Thank you for another great presentation to get us started into this week. Let's start out here with a question from a first-time viewer, and that would be Duke from YouTube. Could you cover AMC? Thank you. I think the small caps have potential as IWM is going.
Well, yeah, and AMC is a tough one to view in that, because it's got its own world, right? It's got its own thing going on. Now they're going to have to figure something out. The traditional theater format is going by the wayside. I know that back when we had the pandemic and the whole meme craze, AMC's principles sold a whole bunch of shares and shored up their balance sheet. So they do have a decent looking balance sheet. So they have some money on what they can do. A lot of people think that they'll make an acquisition. Perhaps they do that. But something's got to change. And I've seen or read about creating this just amazing experience at the theaters to where they just remodel them with super new technology, et cetera, as a way to draw people back in. But I don't know if that's enough. But as far as what the chart's showing you, right here at $5 is key. And you can see how we've traded right at the $5 level since May. And we had, that quick spike. Don't even want to go there. And then just nothing since then. But it is good that it's holding right in this $5 level. It's holding above the 50-day moving average. You can see that we broke it back in April and May. That was a pretty dicey time. We got back above 5. And for those of you that may not be familiar, the two price levels that you watch based on institutional rules are $5 and $10. So if an institution has an investment objective of aggressive growth, they can own single-digit stocks. And $5 tends to be where the floor is there. So if a stock breaks below that, institutions, if they heavily own it, will likely come in and support it, get it back above that level, which they want to do that because if they don't within a period of time, they have to sell their shares based on securities regulations and then realize that loss. So what they'll tend to do is support it. And that's why we're just kind of pegged here at $5. Now, it hasn't created a lot of interest past that. I don't know what the catalyst would be to move it higher, but if it could some way make a sustainable run up here towards $10, well, then it starts to garner the interest of investment companies. And there's a whole lot more of these that have an investment objective of growth or growth in income. $10 is the floor there. The stock has to trade above $10 for them. So they can't even get in it yet until it gets back up there. So AMC needs some sort of a catalyst to break from 5 and start marching up towards 10 to gather that interest. But to me, I don't see a catalyst one way or the other. Clearly, they're supporting the $5 level. So I don't know about if it breaks below 5, how long that would last. It didn't last very long last time. But where is the catalyst to get it above 5? Maybe they come up with an announcement of an acquisition or some sort of new plan. But it's going to take something along those lines, I think, to reignite a sustainable bid under the stock. So,
Thanks, Rob. Next up, we're going to go to a couple symbols from Manuel. First one is going to be ANF.
Oh, good old Abercrombie and Fitch. Gosh, haven't heard of that one in a while. And some of these old names in the clothing world were doing really well, really flashbacks going back. And you can see this nice run that it had. Then we had a little FOMO here and got too vertical, too far away from the 10-day moving average. So we came back and corrected that. We tried to make another run at breaking that wave 3 high, and it couldn't do it. And this is all because of what's coming out from the retail sector that consumers are pulling back. And that's what's happening here, is the stock is succumbing to all of that news that the consumer is not spending as much. We're at a 28% wave 4 correction, which that's also no man's land. It labels it if it gets past 20. That's the algorithmic rules. But Elliott himself preferred to see this move more down towards 30. And that's where we're getting. But I prefer the 38.2% level. And I think that we'd be awfully close to that if we happen to come down and test these highs from back in February and March. It seems destined to do that. We also have a bearish 1030 crosshair, the 10-day moving average crossing below that fuchsia line, which is the 30-day moving average. And to go long this stock, you got to get back above the 10-day moving average. And you would prefer to see the 10 then turn and cross back above the 30. But for now, I think we're going to see this level right in here where we were in March and April. And then we'll go from there and see if that can hold. There is some pretty decent support in that area. Maybe that's enough And if the Fed does announce a second rate cut, and feel like that's going to help from a liquidity standpoint, perhaps help the consumer, then maybe we can go ahead and start marching on that wave 5. But since the wave 4 is green, the algorithm is not confident that that wave 4 is complete yet. So we're still in a wave 4 to the downside, and then we look to try to figure out where that wave 4 could move to, and that's where you look at these percentages from the fib level. So that was a good one to do some education on. What's the next one?
Absolutely. Second symbol for Manuel is going to be CMG.
Oops, CMG. And Chipotle, the same thing, with moving. They defied everything, and then finally it caught up to them a little bit on the margin side. They just were just executing amazingly well, and it seemed like every earnings report, you can see them, every earnings report you got a big pop. But now the first chink in the armor on margins. Now look at where this wave 4 is here. Now this one's pretty interesting. It has colored it purple, so it does feel like perhaps this could be done. And we're right at the 61.8% level. I think this is kind of a best in breed, if you will, in the restaurant area. And as you can see, restaurants over the past couple of months were hit pretty hard. And maybe if we do get that second Fed rate cut and kind of releases things a little bit, then we could turn and move back to the upside. But higher food costs, compressed margins, finally got Chipotle. And then, some of the sell off of the big stock split that they announced. And, that kind of plays into it. I've talked about this before, the way it works when you have a big stock split and you have a stock like Chipotle that's heavily institutionally owned. They tend to sell some of those shares, book some of those gains, but then maintain a pretty decent sized position in it. So if that doesn't get absorbed, then this is what happens. But this is an area where I think this one's pretty interesting. If we can hold right in here, hold right in this $50 level, right around this fib level, then perhaps we can take a march up in the wave 5. First step, first things first, we got to get back above the 10-day moving average. So if we can do that, we are getting some separation between the 10 and 50-day moving average here. That doesn't last very long either. That coincides with that rule that no security in any time frame gets very far from the 10-day moving average. So same type of scenario here. The 10 and 50 don't separate too much. See how they just kind of went parallel through here? That's what happens a lot. So when you start to see a bigger gap there, then that's telling you the stock in this case is oversold, overbought if it's the other way. So I think this one's pretty interesting. And I think you could maybe take a speculative shot here. If you want to be more conservative, let it get back above the 10-day moving average with a follow-through day, and then see if we're not off in the wave 5 on Chipotle. But I'm finding this one pretty interesting too. This one's on my watch list every single day. So interesting that one was asked about.
Agreed. And just real quickly, I wanted to just go back over that webinar that you mentioned, the Hub AI launch that is going to take place on August 7th at 7:30 Eastern Time. So there were some questions about what time or what day, rather, it was taking place. So that'll be August 7th at 7:30 Eastern Time. And I'm placing the registration link back in the chat again just to make sure everyone that is on can see that. So we'd hope to see you on there. As Rob said, there's going to be lots of valuable information and content to take away. All right, we're going to go over to PFE for Will.
Yeah, I totally agree. That's the place to be at that event. And, if you don't have it already, certainly going to make you want it when you see it and all the cool things that are coming. So PFE, Pfizer, we've gotten a renewed bid in the healthcare industry. Pfizer reported pretty good numbers. And this tends to be a defensive sector. So if the market's going to continue to weaken a bit, then I think we could see this wave 3 extend. So, Will, I think you're on a good one here. And this the trading breaking above this wave 1 high right there at 30, consolidating that move, testing it, and then breaking higher. I think Pfizer goes higher from here. So I like that one a lot.
Agreed. Next up, we're going to go over to RCL from Matt.
Oh, that should be something interesting to look at. Let's see how the cruise industry is doing with Royal Caribbean. And I talked. I went on a cruise myself this past summer, and as I have a habit of doing, I annoy people that I'm talking about. I always ask them how's business and how are things going, and all the issues that occurred when the cruises were canceled and stuff during the pandemic and all that kind of stuff. And they told me that they're almost fully booked out a couple years in advance. So the demand is there. At some point in time, you're going to get a pullback. That wave 5 extended 119%. So even on this pullback, you're not looking for it to move back to the previous 4. Remember, Elliott Wave rules: if the wave 5 extends past 100%, you only look for a 61.8% corrective move, which we're not there yet. But we're holding that 50-day moving average, which is pretty interesting. So if we can avoid the Fed disappointing the market, waiting too long, making the economy too weak to where people stop spending on cruises as well, then you might start to see that backlog of bookings dry up a bit, and perhaps we could head lower. So I think what happens in the next week in the market in general, with what the Fed says, is going to let you know whether or not we extend further here or move back down. But holding the 50-day moving average is definitely encouraging here, and it's going to be a bit of an indicator, I think, of the consumer. Everybody was just really anxious to get on a cruise ship after not being able to for a while. But that's all played out. Now we're getting back to more traditional fundamentals, and the health of the consumer is a big one for the cruise lines.
That is a fact. We'll follow that one up with UPS.
Just, we always look at these delivery services, and the name that always comes up, as you all know, is Amazon, and they UPS disappointed significantly, and so you got the big gap down here. Now it did go far enough to label the wave 5 at 81%. Now what normally happens after these big drops is you get a little bit of a sideways movement here before perhaps turning and moving back up. Right now it's just kind of going back up to that 10-day moving average. So would expect a little bit more channeling here. If you want to go long this, if you're looking for, okay, this is oversold, and I still think you have to wait for it to get back above 135. That's going to be the key level. Now, can it do that? Is going to be interesting, because if my thesis is correct that maybe we get more of a market correction, the buy the rumor, sell the news, once we actually start cutting rates. Right now, the market has been trading in anticipation of rate cuts, and that's why we've had a fairly decent market. But if we start to correct once we get them, and then if the Fed disappoints tomorrow, then almost Katie bar the door, Zach. Who knows what could happen? We could see some wild volatility tomorrow if the market doesn't get what it wants. But just looking at the chart of UPS without all the backdrop there, to go long this, you need it back above 135. For now, I would expect it to stay range bound.
Very well. All righty. Next up, we're going to go over to Abhishek. Thank you, Rob. Can we please look at SHOP? NOW now did great after earnings. Thank you.
They did. You were right. I saw that. And that was a pretty impressive earnings report. Shopify, we'll see how that one does. We are in a pretty well constructed 5-wave to the downside pattern here, with the wave 4 right at a 50% correction, coming back up, filling this gap, hitting 50%, and then heading back down. That's about as classic as it gets. So if we continue to get negative consumer news, then perhaps we move lower here. But the key level to watch on Shopify is right where we are, because that's support from May. You can see how long we traded sideways through here. And then we made a run up, but really that was just to come up and fill this gap, label the 4, and now the key here. So This one's pretty easy to watch. If we break below this 60 level here, and we're trading right there now, so call it 59. If we break below that, if we break below this support from May, then we're almost certainly going down to this wave 5 move down here. But if it can hold here and get back above the 10-day moving average, then maybe this pattern can become disqualified. But for now, that's about as well formed of a 5-wave to the downside pattern as you can ask for. So pretty nervous about that one. If you're thinking about it from a long standpoint, it's got to bounce up here, get above the 10-day moving average. From a short standpoint, if it breaks through this 59 level or right in this area here from May, I think you've got a great short down to that wave 5 level just below 50.
Next up, we have Achu, who says, can we go over LMT and the crazy run-up it had?
We can. And that was a bit of a surprise. And the other side of this is it's another one of those defensive sectors. So the market rotates. You saw Pfizer. Healthcare is also a defensive sector. And it's kind of a play on words, right? Defensive sector because it's in the defense industry, but it's a defense sector as well from, defense spending. And when the market itself goes away from the high beta stuff, which is where we've been for so long, then these stocks tend to catch a bid. So as part of that, maybe there's a view of potential of Republican-controlled Congress. They tend to spend more on defense, and I think there's a lot of things that play in. Now, the thing to be careful of is we're overbought right now. So we got that vertical move, which, I don't like. I get nervous when things go vertically up. We're too separated from the 10-day moving average. It's having a nice day today for sure, but that's pretty overbought. So I would want to see just a little backing and filling here, but perhaps this one is not done and that we may be moving higher. You can see that the ADX is still moving up, positive directional indicator moving up. The sellers are nowhere to be found. So we're just overbought right now, but I don't necessarily think that's the end of this move. I just wouldn't chase it today, but keep an eye on it over the next couple of days. And if it backs up a little bit, lets that 10-day moving average catch up, then perhaps you have another long position at that point in time. So that's what I'd be looking for there. But good call on looking at what's going on currently in the market.
Agreed. And thanks for your insight there, Rob. Constantine would like to know, why should tech bounce tomorrow?
Tech is getting a little oversold. And if Chairman Powell does tip his hat that, September's coming as a rate cut, we could get a bounce. But I think that's all it's going to be. I don't think it's going to be a resumption of the big move to the upside in tech. I think it's just going to be a bounce. And we'll have a better idea with what Microsoft says after hours today. But that's why, if they are going to get the multiple rate cuts this year that the market clearly wants, it could be a bounce. But I think that's it, Constantine. I think it's just a bounce trade. I don't think all of a sudden we turn around and we're back off to the races for another run. I think it's just a quick oversold bounce, and that would be the end of it. That's how I view things. So, Zach, why don't you take the last few minutes to go through and show people how to put in SBAC into the platform.
You got it. So hopefully everyone can see my screen here now. I'm over here on the Hub platform that Rob was just covering his analysis on earlier. I sent that link in the chat as well. If you're not already signed up, please go ahead and do so. So we're going to go ahead and just post an idea. This one is going to be an official idea. Correct, Rob? Not a post?
This will be an idea, yes.
All right, so as you can see, I hit that little light bulb over here, which is the ideas page. We'll see all of the options over here on the left toolbox between all ideas, my ideas, the votes that you haven't, or the ideas that you haven't voted on, rather, and so forth. So for this session, we're going to actually create an official idea. And the reason I asked and clarified with Rob between a post and idea, a post is essentially a draft idea. The criteria for the legitimate idea to be posted that we're about to do is not there yet. There's something you're watching, and once that criteria is met, then you can post it as an actual idea. But as a post, it will be kind of a reference note until that criteria is met. So as we can see, I created a new idea, which is essentially you could equate it to paper trading. For any brokerage that you might use that has the option to paper trade, you're getting all of the real live data rather, and all of the same metrics and process that you would experience as if you were actually making this trade with real risk on the line. So this one was going to be on SBAC. And what was the target on that one there, Rob?
We're going to go with 227. We're going to go with the AI's target rather than the zigzag target, but they're both pretty close. They're 3 points away from each other, but let's do 227.
Alrighty.
So
and for the time frame on that?
Let's do the 2 months again. So once again, you can show them how to do the customization there.
Absolutely. So yeah, as Rob mentioned there, you'll see that there's these set intervals of time that are fixed for you to choose from. However, if you needed something that is not within those set times, you can go down to the very exact day that you prefer. I always obviously prefer to go to the next trading day. So we'll go 2 months from, let's see, well, today would be the 30th of July. So we'll just go to, well, it's starting me on August, but we'll go to, we'll just call it October 1st. How about that? And we'll come back to make this pretty after the session is over. But other than that, that is the whole process of posting idea. It'll be posted here in just a few moments, so you can interact, vote on it, make any comments that you have around Rob's analysis on this week's case study consideration. But other than that, Rob, I'll pass it back over to you so we can wrap up this presentation.
Yeah, and I love that aspect of it, and we're seeing more and more activity as more and more people are posting their ideas, and I think it's great. I just want to encourage people not to get discouraged if somebody disagrees with your idea. That's the whole thing. Nobody views anything in the markets the same way, or there'd be no markets. Right? Watch out below. So thanks everybody for taking out part of your trading day. I'm going to get back to mine. Let Zach get back to his, and look forward to talking to you again soon. And Thursday night, we'll have a lot to talk about in that insiders meeting. So take care, everybody.